Hey everybody, it's Mike from Orderflows and welcome to today's video. Today's Thursday, September 29th, 2022. And, market had a big down day. We're down about 2.5%. And, that's following up yesterday where, we basically had a nice rally. Tuesday we sold off and Wednesday we rallied back up. And now Thursday, it's almost like the, the mirror image of opposite of what happened on the day before. So, some interesting things in the order flow I want to talk about. And, I'll get to these imbalances a little bit later. But, one of the things I want to talk about is, some of the sign that, a market is starting to trend, right? In order flow, there's many different facets, if you will, of order flow that can help a trader determine, are we going to be reversing or, is there momentum in the market, for this trend to continue? And it's where it gets interesting is because there's so many different little nuances in the order flow that traders sometimes forget that they have to differentiate it from it, because when people trade using indicators or things like that, all they know is, oh, there's a signal, I got to take it or not, basically. Is it red light or green light? But with the order flow, there's all these little nuances, and for me, determining whether there's momentum in a market is by watching the volume. And the easiest way to do it is point of control. Point of control is the price level in the bar with the most volume. And if a market is moving, obviously you want to see points of control, right? The price level where the most volume is transacting, over bars move lower and lower. Another way to check is also, is the volume in a bar migrating lower within that bar as well? Okay, because most of us we're familiar with the volume profile, right? We've all seen it on a chart. The daily profile. You got your D shapes, your P shapes, your lowercase b shapes, etc. And you could even do that on a bar by bar basis. And when the point of control, right? Because you have point of control in a profile as well, is in the middle of the bar. That's your normal place that you're going to expect it to be, sort of in the center, your normal distribution day, right? Your D shape where the most volume is, sort of concentrated towards the middle. It's when on a bar by bar basis, you start seeing each point of control subsequently go down, right? If the market is trending down, but then within each bar where it's appearing, is the point of control appearing near the top? Is it appearing in the middle, or is it appearing towards the bottom? In the middle is where you would normally expect it in a normal market condition. If it's appearing somewhere near the top, I'd be looking at where are we trading relative to where that point of control is. If we're at like a high of the day or a swing high and I see points of control coming up near the top of the bars, then that's sort of telling me there's supply in the market. However, when a market is moving, if it's going down, I'll be looking for point of controls to be coming in towards the bottom of the bars, because what's that is telling me is that traders are accepting lower and lower prices, okay, and as opposed to rejecting them. So if we're accepting lower and lower prices, then chances are we're still going to go lower, okay? So today was a great example of that, right? We had a nice sell-off, cash opened up. And what was interesting is, because it doesn't really happen very often, is when cash opened up, the cumulative delta for the day, which is obviously the delta for the whole session up to the cash open, is right around unchanged. It was plus 187, then cash open went minus 700. Okay, so it's like basically starting at zero, which I said oftentimes you come into the morning and cumulative delta is negative 5,000 or positive 5,000. It's very rare that it's like that. Sorry about that. Phone was ringing. And, so cumulative delta was sort of negative. So it's kind of neutral, even though, at this point, we were, it was a little bit lower, right? 8:30 this morning, 8:30, where are we here? This is like around 8:30 right here, okay? Because we closed yesterday, we closed much higher, 37.32. Overnight, we had that nice sell-off during the early morning of Europe. But, we're coming in here at 8:30 in the morning, and we're trading about 30 points lower, okay? and cumulative delta was right around basically flat. Okay, so that's one thing to keep an eye on. Which way is the market going to go? So obviously negative delta first couple minutes. Next thing we'd notice is we're down about 2,000, 1,200 in the delta, but cumulative delta is at minus 2,200. Okay, so obviously that's a bearish sign. Now, point of controls, right? They're appearing sort of in the middle, right? You got the first bar that opened up. It's a little on the lower end, okay. But then the second bar, kind of in the middle. The third bar, it's coming up near the top. Okay, so again, like I said, when I see point of controls coming in near the high of the bar, it's telling me that there's probably some supply in this market, right? People were, because again, when we're putting in this point of control at 92 and a quarter, we're still sort of going sideways at this point. We're trading 92 and a half all the way up to, 93 and 3/4. So we're still within the range, sort of this opening range, but now we're starting to break out of the opening range. And we start coming in lower, right? We got that nice stack selling imbalance. And what do we got? First bar's point of control is here, but then the second bar, it's at 95 and a quarter. Next bar, 92 and a quarter. The next bar after that, 86 and a half, and it pairs it up, right? You got two at the same level. Okay, not a good sign. Point of control, next one at 84 and 3/4. So lower, 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 lower. But they're all sort of, in the middle, except for this one. It's a little on the high end. I know that, we're still on negative delta. But I know the low is coming up close, right? We're coming in hot to the low. The low is here at 3.5. And as we start getting near the low, again, we're sort of, point of control is sort of in the middle. Then I get this bar point of control right near the bottom. Okay. And again, this is just right off the low at 3.5. This is about 4 points away. And then we get this big bar down, point of control near the bottom, two stack selling imbalances. So I'm looking at two bars with point of controls near the lows there. Okay, then a third bar, again, point of controls migrating down. Everyone is lower, lower, lower. Another one right near the low. So I got three point of controls right near the lows. Okay, and so that's telling me that price is going lower. Obviously, these are red candles. It doesn't take a rocket scientist to say, oh, price is going lower. But more importantly, volume, and as a result, value is also going lower. Now, what a lot of people haven't really been talking about this week, I don't know, maybe I missed it, is, VIX is in the 30s again. All week we've been in the 30s. Back in August, we were trading 19. I don't want to say the teens because I think we were just around 19 and in the 20s. But, it's gained a lot in terms of volatility. So I know that I'm sort of expecting wide-ranging candles. This is an E-mini 1-minute chart. Like this bar here is 78 and 3/4 down to 71 and a quarter. So, that's a 7-point bar. That's about on par with, VIX at these levels. So I got 1, 2, 3 point of controls near the bottoms of the bars. Another one here. Okay, we're obviously going lower. Volume is going lower. And that's the important thing to sort of keep in mind is, the heavy volume is going lower. Look at the cumulative delta, obviously negative. Obviously it's growing because you're going to get some big bars here, minus 1,000 delta. Then it's sort of, point of control in the middle. Okay, point of control in the middle. Point of control, on the lower end. But really all you got to do, that you're already printing point of controls lower. Just look for that break down here to new lows coming in, around 71, 70 and a half. You just drop a stop in there. Okay, now here you got a couple of selling imbalances to hide behind. So you got, one aggressive push, another aggressive push, although this aggressive push looks just like a stop that got triggered. Market came back up. Trader where? Traded right up to this point of control. Now on a trending market, watch your point of controls because those are often the levels where the market will retrace back to. And here you go. Okay, look at this. So cash open right over here, lower, lower, lower. You got these 2 point of controls. This bar, we opened up at 86, rallied right back up to 86 and 3/4 where that previous point of controls were. Okay, then we go down. Here we opened up above, start trading lower. So you got this 2 point of controls. Obviously you got that one in the middle, it's a little bit higher, but this one and this one are the same price. Look at this bar. We opened up at 79.5. We traded back up to where? 80. So we come back to these 2 point of controls. We came back to these 2 point of controls. This one opened right on the point of control here, and then immediately went down. So, that's another thing that you could look for on a trending market. Are these point of controls holding? Because they are going to become your resistance. Right now, if the market was rallying, I'd be looking at the point of controls to be support. I'd be looking for point of controls to be up near the highs. But yeah, I mean, so I want to get back to, that's how you could use point of controls to help determine, are we trending or not. Sort of going back to the 7:30 time. I mean, there was that big size in here at 36.90. Okay, you can see what traded in the footprint 14.96. Earlier came down there. We tested at 36.90, bounced up. The numbers came out, and then it hit there once, 210, rallied back up. Then this third time it came in here, right, 36.90, broke right through it, right, and when it broke through it, it did it pretty quick. Now, when there's big size, sort of this resting liquidity in the market, people that trade on a dome, they're sort of trained to see the big size and jump in front of it. Oh, okay, there's 1,500 on the bid here. Fine, I'll buy 90.25, right? And then they're just going to place a stop right below it. But once this breaks, right, it can break pretty quick and hard. So, and the thing is, for big traders, I know when I was working at JP Morgan and, I had some selling to do and be like, yeah, I see, oh, there's a strong bid there at 90. Okay, so, I'll just be selling it here at 91, I'll scale some stuff in here. But as this bid starts trading out, this 1,500 lots, if I see it, getting down to, 1,000, okay, then 900, 500. Once you get below like about 300, it can trade just like that. Someone can just come in and whack it. And not only that, there might be some stops here. These guys that trading on a dome, getting long in here at 90.25, 90.5 for a bounce back up like happened here. But once that breaks, they got their stops in there. You're going to get that effect like this where it's just no counter trade, zeros here. So obviously there's not like two-way auction, just a one-way runaway train going on right here. Sorry about that. I don't know why everyone decides to call me right now. But once that volume breaks, right, it's very quick. And when you got big volume like that, that breaks very fast, a lot of times you don't necessarily retrace back up to it anytime soon. In this case, we never got back up there for a while until just before cash opened. I mean, this was at 7:34. It wasn't until like here 8, so about a half hour before we came back up there. It's not like we're going to break and then just sort of rotate around and come back up. When you have that big support in the market and you break through that, it could be a while before we come back up. And what was interesting, obviously, you got that big stack selling imbalance. Up here, you got a bunch of stack selling imbalances. This bar's got 2, obviously, but that's at 7:30. When the number comes out here, you got 1. Here you got 1. Here you got 2, right? You got mostly stack selling imbalances. Again, it's in my opinion, it's these are due to the volatility around the number. But once we broke that from 90, we trade all the way down to 73.5. So almost, that's almost 20 points. No, yeah, 20. Can't think right now, but yeah, from 90 all the way down to 73.5. We did bounce back up. Again, we came back up to where? That's why I like having these zones drawn out, because I know that, okay, I got a stacked selling imbalance here from earlier. This is going to be a potential resistance area. You see we came right back up to that area, traded 2 contracts into it at 86.5 and came back down to, I don't say 80, but 80.25 here, but 81, 82. Right, then I know I got this other level coming in here. The low is 88.75. Okay, we got within a couple of ticks here. We got as high as 87.75, so within a point. And then we reach it here finally. This is 7:57. We trade a couple contracts in, a couple ticks into it here. 87.5, 89. Sorry, 87.75, 89. And you drop right back down to 85, right, in the next bar. All right, and even go down lower and down into the, again, not 81. Oh, you did get 81, but 82. But really, these are these easy trades, right? And when you're looking at these stack selling imbalance, just like you got stack buying imbalance, you got aggressive buyers coming in here. Okay, is it worth a shot? If this one holds, right? If we trade back into it and it holds, where are we going to go? We're going to go back up either to this level or this level. Okay, now again, not all the times they work so nicely like this, but that's something you should look at in your trading. We all love to have sort of levels to trade around, but when you're trading, with the order flow is giving you levels. It's telling you where these aggressive buyers are active, right? And again, I also like to use point of controls as support or resistance areas, right? Because that's the price level on a bar where the volume is transacting at, right? So that's important to know. Sometimes the way I like to describe it to people is almost like, Jack in the Beanstalk, right? It's like, what if someone were to come up to you and say, hey, you know what? I could show you something that, where the market can turn, basically, on your chart. We're just using information from what's actually trading. Would you be interested in that? Well, yeah, you should be. If you're just looking at a normal bar chart like this, now this is a 5-minute chart, people are going to say, well, yeah, I see people draw out zones, almost indiscriminately and say, okay, well, yeah, I got this wick up here, so that's my resistance zone, right? So what they'll do is they'll do something like this. Okay, yeah, I got this resistance zone. Okay, well, you had one here that failed, right? You can draw zones out indiscriminately. Yeah, here, support zone here, right? You can see these two candles. Right? It's a nice double bottom here, and they'll say, yeah, I see it went up, but they won't show you the part where it just dropped like this, right? And then here, right, your big wick down here, yeah, that's your support zone, and it just ate right through it very fast, right? Just with nothing to stop it. Whereas if you're looking at the order flow, you can say, yeah, you know what? I have a level here because earlier there was aggressive selling. Earlier there was aggressive buying. All right, so I started out this video talking about point of controls, and I moved to imbalances. So there's just so much information that the order flow gives you. So I'll end it there. If you like this video, be sure to hit like. Be sure to subscribe if you haven't subscribed already. So thanks everyone. Bye bye.